Hello YouTube, Salivate Metal here, and it's been quite an interesting and exciting a week or so after the election, with the stock market plunging and then rebounding and rallying to new highs. And things are sort of holding steady at the moment. I've been contemplating that over the last few days, and found this article which kind of sums up my thoughts, so I'll just read it to you. Gold prices ended the U.S. day session slightly higher, seeking mild support coming from a report on U.S. producer prices that was well below market expectations. Still, an upswing in trader and investor risk appetite the past week continues to be bearish weight on the safe haven gold market. Deteriorated chart postures for gold and silver markets the past week have also led to technical selling pressure. December COMEX gold was up last at 40 cents an ounce to 1224.90. December COMEX silver was last down 0.103 at 1694 an ounce, so down a dime. This is where it really gets interesting. The October U.S. Producer Price Index came in an unchanged, which was below market expectations of a rise of 0.3%. The PPI, excluding food and energy, was down 0.2%. The report suggests there are no inflationary problems on the horizon, which is important. They're saying that it falls into the camp of the U.S. monetary policy doves, who do not want to see interest rates rise anytime soon. However, St. Louis Fed President James Bullard said in London today that he foresees a U.S. rate hike coming in December, and that just sort of bolsters the point that they've been saying that they were going to raise the rates in December, even though there's obviously some pushback, as we can see here in this article. World stock markets were mostly higher overnight as the risk-on trader and investor psychology continues 1 week after Donald Trump won in a surprising U.S. presidential election. The marketplace reckons a Trump presidency will unleash more business spending and infrastructure rebuilding. So that's both public and private spending. Amid less taxation and less restraints. So it seems like the markets are reacting positively, with the Dow Jones Industrial Average on Tuesday closed at a new record high. U.S. stock indexes are pointed towards weaker openings when the New York session day begins. So it's quite fascinating. It seems like the market is reacting positively to less regulation, less taxation, more spending by businesses, and infrastructure rebuilding, which essentially means government spending. And government spending that will essentially help the infrastructure in the United States, which would be a benefit to everyone, including businesses. But we'll see how that's laid out. Obviously, the infrastructure spending from the Community Reinvestment Act, I think, of 2009, championed by Barack Obama, that didn't turn out so well. Those shovel-ready jobs weren't as shovel-ready as he thought. That's a quote from Barack Obama. So it'll be interesting to see where things lie. I think that I do agree with this article that we will see kind of a push and pull, but essentially a steady price for the precious metals until December. And I think once December hits, whether they decide to raise or lower the rates, or not lower but keep them the same, will be the tall tale sign for precious metal prices. I do feel they will raise those rates and the precious metal prices will dip even further. I'm not prepared to say they'll go back to the new lows that we saw prior of the low 14s or high 13s for silver and below 1,000 for gold, but I do believe they will dip some if they do raise the rates. So post your thoughts below where you think things are, and I'd like to extend a multitude of gratitude to y'all for watching and encourage you to please rate, comment, and subscribe.